So today is Tuesday, the 28th of July, and coming into the market open today after yesterday, it feels like the cracks are starting to show in terms of what the market wants to do. So, in regards to the S&P, it's holding up relatively well, but at the same time, um, the Mag 7 basically comprise one third of the S&P, and there's definitely cracks starting to show in the Mag 7 in regards to Tesla, obviously having this sell-off that it had after its earnings. Google, a similar story under its 200-day moving average, and four of the rest of the Mag 7 are looking to report this week. So um, Amazon, Microsoft, Apple, and Meta are looking to report this week, but all of their charts, stage 3 at best, if not clearly in stage 4, except for Apple. And Apple is one of the only stocks in regards to the Mag 7 that isn't closely tied to AI, hasn't really increased too much of its capital expenditure in the same way, anywhere near in the same way as the rest of the Mag 7. So the fact that it's holding, made new all-time highs yesterday, it's holding its highs, whilst everything else is kind of deteriorating, is a clear sign that the AI bubble is starting to pop, and an unwinding's happening, and that is clearly supported by the Kospi in terms of the fact that it's in a clear stage 4 downtrend, closed well below its 150-day moving average, coming into its 200-day moving average potentially in the next few trading days. And it endured another circuit breaker. It closed over 10% down on the day. And for the most part, I'd just say, for simplicity's sake, about 50% of the Kospi is basically AI related in some way. So the fact that this is all happening is a clear sign that the market doesn't feel comfortable with where we're at currently, which could be as a result of what's going on with Iran US, with what's going on with oil, or what has been going on with oil, and just in general the fact that the market's starting to seem a little bit nervous in terms of, okay, we don't actually know if this capital expenditure is going to be worth it or not, and is it going to be profitable? So the fact that all of this is happening, the clear signs to pay attention to, similarly for the semiconductor ETF, basically mirroring the Nasdaq. The basically the only theme that kind of prevailed throughout the last few months, alongside space stocks, they're both taking an absolute battering. So for me, things are starting to reveal themselves in terms of the market is not wanting to put risk on right now. And it makes sense given the fact that FOMC is coming up this tomorrow, in fact, alongside Fed funds rate decision as well. The fact that that's happening kind of at the same time is I guess just so much uncertainty. The market isn't gonna go risk on into this week, or look to take on risk before such a big event, especially considering that there's been so many signs to basically not do that. Yesterday, I spoke about oil coming off its kind of clear this gap area here, which is a clear resistance level, and also kind of round number 100 level, key psychological level. It rejected pretty aggressively yesterday, and did end up closing kind of near the lows, not completely at the lows, but for the most part, it was a massive candle. What was it? Complete move, nearly 12%. So a big move to the downside, and I felt like with everything going on, maybe there's potentially a surprise to come in tomorrow. And this is kind of like the pre-warning that the market wants to have some sort of relief in terms of rally to the upside. So the market did show that yesterday in terms of a slight gap into the open, but as soon as the market opened, it just completely retraced that and ended up making a new low on the day. And as of right now, the market is gapping down even further into the open. So whether or not there's more follow through today, I think at best I wouldn't expect this move to be retraced. I think at best, I don't know, maybe we just kind of have an underside retest of this kind of area here, and then we kind of just hover around that until there's a little bit more clarity in regards to FOMC and Fed funds rate, and just comments from Walsh in terms of any clues as to what might happen, or what he might choose to do moving forward. So taking a quick look at the breadth indicators, the number of stocks above the 20-day moving average is back around the 50 mark. Had a bit of a jump yesterday, but it's nothing really to write home about, because it's just at the midpoint, like it has been basically throughout the last 2 months. Similarly, for the number of stocks making 1 month highs, no real movement there, still kind of in the mid-range, mid to lower end of its range. And similarly for the number of stocks making 52-week highs, there was a little bit of movement for both of these, the 1 month highs and the 52-week highs, but ultimately I guess it's kind of expected with the slight relief that we had yesterday for some stocks, but really there's no real movements to say to basically give any inclination in terms of it being a clear signal that the market wants to go in a specific direction, or just have some sort of strength re-enter the market, because I think it's fair to say that the sellers are in control right now. So just taking a quick look at bond yields, just continuing that uptrend. Really, there's been a little bit of a retracement over the last few trading sessions, but for the most part, this trend is strong, it's intact. The 50-day still hasn't been touched and is basically acting as clear support right now. A couple attempts there, but didn't actually touch for the 2-year, and similarly for the 5-year, it did touch, but it's just clear support and it's in a clear uptrend. So the 10-year and the 30-year having a little bit more trouble getting through their recent swing highs, kind of rejecting on those areas, but at the same time, they're all in clear. All of the bond market is in a clear uptrend. So the fact that that's happening alongside a rising dollar as well, it's looking like this is potentially setting up for and maybe a breakout again. And if it does break out for this level here, that's kind of the last point of resistance before potentially a move up to, say, the 103 area or 103.5 area. So it to me, there's a lot of signs that the market is just a bit scared. Really, no one really knows what's going on, but what we do know is happening is there's a massive unwind in regards to AI, and the fact that AI is so has such a large weighting in terms of the Nasdaq, and I guess just the stock market in general, the Mag 7. It just makes sense that the market is just looking to de-risk a little bit further, and in line with the midterm. Kind of, I had a quick look into it, and the year coming into the midterm is usually a down year, or the 6 to 12 months is usually kind of a down period, and then the month or so leading into the midterm elections tends to pick back up, and then following that is typically a bullish year or a positive year. So it looks like everything's lining up for that to be the case, and so if that is the case, then a couple more months of potential downside into August or throughout August into the start of September, and then after that potentially some sort of bottom, like a capitulation or bottom like we saw back in March, maybe not that drastic. Depends kind of if what hits the market, if there's any more escalation with Iran US. But yeah, for now, that it seems like it's pretty clear. So it makes sense just to remain patient and wait for a clear signal that the tides are changing in terms of I want to see strength across breadth. If the 10-day and the 20-day is still below the 50, then the only reason that I'd enter the market at this point is if there's a clear signal of strength across breadth indicators, or some other massive news that is just undeniable that risk on is back on. And other than that, it would be until the 10 days back above the 20 and most likely 50, depending on where the 50's at. So coming into the market open today, based on everything, based on FOMC tomorrow, I am definitely cautious and probably more cautiously bearish, if anything. I don't necessarily see it being a down day, but at the same time, it would make sense that it is. I think chop at best, kind of doji type day, or a down day. So cautiously bearish coming into today.